for me, when I trade, I use the margin account. I only trade on cash.
The stock market has been viewed as a hedge.
Welcome to part 2 of this podcast with Rufaro Hozheri. Our discussion has been incredible so far. Let's pick up from where we left. The
security to cover up your.
Yes, but the problem is it's now at the bottom, so you lose, and then you have to pay the interest. So for me, when I trade, I use the margin account. I only trade on cash. I don't like the temptation of saying, okay, I know I can even do even more than 100,000 per trade. But it's very easy to be tempted, and if you are wrong, then you can ruin the whole account. So margin trading, so what they do is they call you, they have what is called a margin call. You see an automated message, or they say, if you don't sell, close this position, like in the next 1 hour, we'll close on your behalf. And it's in most cases for a loss. So that's the thing. It's good when it's going in your favor. So I have resisted that temptation at all, even though I have access to those things. Yeah.
Isaac, I have a story for you.
Yes.
Yeah. So exactly what you've described, I've witnessed it firsthand.
Really?
So yeah. So like I said, in my first year after varsity, when I was working, that was 2022. 2022, the market was moving.
Yes.
The ZSE was moving. I tell you, it was moving to such an extent that the ZSE held a meeting and decided to say the market is moving so high that we are now making some adjustments on the circuit breakers.
Yes.
If they had a whole raft of measures. If the market moves by more than 10%, the all share moves by more than 10%, we'll have a cooling off period. We'll stop. Yeah, that's how. So like you would buy a share in the morning and it would go by 20%. And tomorrow it does the same. It does the same. So when that was happening,
yes.
I then thought I was smart. So what I did, I went to the bank and I borrowed money. I took this money and I came with it to the ZSE. Look, this was Zimbabwean dollars.
Yes.
Inflation was very high anyway. So I knew that at least I thought that yes. I would pay off my loan. I would go on the market and I would make
mathematically and mentally.
Yeah. I'll go on the market. I'll buy my Econet, my Delta.
20% tomorrow.
Yeah. I sell. I sell. Then I cover my position. So on one fateful Friday night,
wow.
The president hiked the interest rates to 200%.
Wow. And so you watched that on the news and you were like, I'm screwed.
Oh my goodness. So you know what that means?
Yes.
When interest rates are hiked, it means your cost on debt is increased significantly.
Yeah, if it was
so I think the monthly payment that I was making to service that debt, if it didn't double, it probably tripled.
Wow.
Because of the hike in interest rate. So immediately when that happens, there is a fire sale on the market.
Yes.
Because you're not the only one who's leveraged. Everyone is leveraged in that market.
And they try to that just happened a few weeks ago.
And they try to sell as quickly as possible so that they will cover their leveraged position. And the market fell. I failed to sell. Yes. And I held the shares a little bit longer. Yeah. I really felt it, because what it means now, the debt is now more expensive. The equity position is fallen.
Yes.
So it's a double-edged sword. So I learned the hard way. Yeah. So I've experienced it.
And
And
it's similar to what I just said, the yen carry trade. I was in Washington, D.C., and I was on my family vacation, and I didn't want to trade or focus on the market. And then suddenly I start getting these alerts. I'm like, the stock market is dropping because I have
yeah,
some notifications. So that's what happened because the Bank of Japan decided to increase the short-term interest, I think.
yeah, yeah,
Then people were borrowing in Japanese yen because
yeah,
for a long time it was down, and then they
yeah,
were now buying US dominated assets or in other countries.
yeah, yeah,
So,
yeah.
and that happened. And for me, that's why I always like to have cash. You see that
Yeah,
even right now, I will probably on my position have like 50% cash, right? It's also because sometimes I occasionally and aggressively trade when I see opportunities. I don't trade every day. So, yeah, so that's the thing, those are moments when if you're a long-term investor, if the market drops by 10, 15%, if you've done your homework, at least in the US and Canadian stock markets, it's
you,
like
you,
you're
you
buying.
it's a good entry position.
Yes. And it's simple because it's more like that's usually what happens is people usually when a stock is hot, I've managed to stay out of Nvidia for some time, right? And I remember it went as much as $140 a share. Right now, last time I checked, it was close to $100, right? And I
Yeah,
know people who bought at the top, right? Because the idea is like, okay, it's going to keep on going up, and then you get it, and then you get bent. So I've learned to say as an investor, as a retail investor, at least, it's very important to be patient. But
yeah,
sometimes our worst enemy is ourselves because,
yeah,
you are like, okay, you see the news. So what I do is I try to detach from what's going on the market to say, usually I trade the first 1 or 2 hours. If there's nothing there, I'm working on other things. And then I usually have alerts to say, if the stocks that I'm following get to this point, I get a text message, then I then kind of take an interest to say, okay, look, what's going on, right? And if these are stocks that I want to hold for the long term, I've done my research. Most of the time, I'm doing research, right? And I don't, follow, minute by minute all the time. So
yeah,
that was a good lesson.
yeah, yeah. It was. I learned the hard way.
I remember, and I'm not afraid to say this. The other time, my biggest loss, I lost 23,000 US dollars,
Wow.
right?
Yeah,
And
that's massive.
and that was I was doing options, right? And
Oh,
I remember I got an option for Tesla because what happens is, and I think it's misleading for people to say, because most people they don't disclose these things, they just show the other side, and of course it's their choice. So I got into options for Tesla at that time, they were going like for let's say 5,000 US dollars. So I got one, and then I wanted to exit, but their core options because I was betting that it was going to go up. And on that day, it dropped by 10%,
mm,
right? And with options, it's leveraged. So it means that 10% is big. It was basically, like I think it was like from 5,000 to 2,000. And because
wow.
it expires, I think they were 3 weeks, right? You think like, oh, it's gonna, so I thought I was selling in to close the position. Then I mistakenly bought another one. And as soon
Oh my goodness.
that was
Oh my.
10,000 that was in that position in the
Oh my
position.
goodness.
But the
Yeah,
good thing is that I'd made quite a bit of money, so I just, laughed off,
yeah,
stopped my
yeah,
other positions, and then I just, yeah,
yeah.
I just learned
Balanced
the
it off.
lesson. Yeah.
Yeah, yeah,
So that's interesting. So now that we have spoken about this, I see that also there's a lot of opportunities like in real estate. What's your view in terms of, because a lot of people are like, okay, I want to buy a house, I want to invest in real estate. But each time that I see, the real estate prices, it quite doesn't make sense because I live here in British Columbia, and you see a house here in British Columbia, let's say it's going for, let's say, two-bedroom apartment is going for maybe 600 Canadian dollars. And for the same amount,
600,000.
a Canadian dollars, right?
That's thousand, right?
Yes.
Okay.
But then, okay, let me give an example of our better province, right? So you find that I was looking at some properties in Borodale. I think they were going for 250,000. So if you convert 250,000 to Canadian dollars, so that's 60,000. So that would be, let's just say hypothetically, it's like maybe
350.
350,000. right? So for 350,000, if I go to Alberta, I can probably buy a good property there, right? Um, and cash. But most people here they borrow. So I often wonder, like, is it that people are kind of hedging? And you brought in very interesting point because as you're talking, I'm just learning some things. I was wondering, like, what's really happening because it just doesn't make sense because of it's not based on fundamentals at least. So,
Yeah.
what's your view on
On real estate, yeah, interesting. For the past 18 months, I've been working for a company that's been in real estate. And I think I've done a bit of some research. I've written an article on it. But the short conclusion that I've realized is that there are less and less investment opportunities in Zimbabwe. The capital markets are essentially, I'm looking for the most politically
yeah, yeah,
correct to say this.
dwindling in a way the opportunity.
Yeah. So if you have 100,000 US dollars, to be quite honest, putting it on either the Zimbabwe Stock Exchange or the VFX is not something that you might want to do as your first option. So the more safer route that people are taking is real estate, and I believe that it explains 60% why we are seeing property prices increasing significantly
Yeah,
in Harare.
it
So
doesn't make sense.
there's nowhere to put that capital,
Mhm.
and it ends up going into
Mhm.
real estate. Yeah, so that's what's causing that. And usually the follow-up question to that is that uh, uh, um, is there a bubble? Are we
Yeah.
going to see a reversal of that at some point? Yeah, we might. Um, but one thing that I think people need to remember is that usually when these bubbles burst, it's
Yeah.
because of leverage, like
Yes.
we explained in the previous
Very
example.
smart points.
So you'll find that these properties are bought on cash.
Yes.
So even if the prices start to drop, you're going to say, okay, no, it's fine. I, I don't care. It's
Yeah.
my property. I will say it's a $600,000 property.
And
If you don't
the
want, yeah,
interest
if you don't want,
rate,
it's fine. But if you have a mortgage
yeah.
that
That's
you need to service, it becomes a different story. So if it's going to happen, it might happen, but not at a faster rate
but
as it would happen if most of those properties were bought on credit.
that's very interesting. So yeah, okay, I got it. So that's very interesting. So I think that's very good because I think for some people it's easier to just buy land and you build over
You
time.
build your property. Yeah.
And hopefully you can maybe rent it out and then get. And another, as we go to the last segment, another interesting surprise for me was that in Zimbabwe some people have money. Because I was talking to one of my friends there and they were telling me, I'm gonna say they were telling me that they sold their house and they were actually having problem to find where to put the money in safe because all the safes in the banks they are full from what they say.
Therefore, yeah.
What it means is people have money, but they
Yeah, the
keep.
money is there. Absolutely, the money is there. Where to put it
Yes.
is the biggest challenge, especially the lack of trust in the banking system and in the monetary authorities in general. That's what's causing this to happen.
So, okay, thank you. And on this final segment, now I'm now curious to, hear a little bit more about your career highlights, Rufaro, because for me, when I look at you, I'm inspired in many ways. You have
Thank
worked
you,
for the
thank you.
United Nations, you have worked in, like in finance. I enjoy doing that a lot. And now you're doing a Master of Business Administration at a very prestigious university, Michigan State
It,
in
yeah.
the United States. Do you care maybe to just share with us, the career highlights, if maybe someone wants to follow a career path like you? Is it really rewarding?
Yeah. So I'm about to get to the most exciting part, which is the after MBA, which is the after MBA. So,
dear viewer, thank you so much for tuning in to this podcast. I really appreciate you tuning in. But did you know that only 10% of all the people who watch this podcast are subscribed? So if you're one of those people who are not subscribed, I highly encourage you to subscribe so that you can get notification when I post new podcast and other content on personal finance and investing. In return, I promise you one thing. I will bring in guests from different parts of the world who have different experiences in personal finance, investing, and from different career walks. Now, the goal is to inspire you and to have these people in conversation with me share their experiences so that we can both learn from each other. If you have any questions, you can also put them on the comments so that we can respond to your comments. I hope you enjoy this episode. Have a wonderful time and may the markets be with you.
the past 3 years, like I highlighted, I was pretty much doing what I usually refer to as the donkey work. So
Yes,
my philosophy is, in your junior years, you have to do most of the donkey work. That's
yeah,
why you see that I do a lot of research and writing,
yeah,
because these are my junior years. But
yes.
now I've decided that, yeah, probably enough of that. I'm now getting into my
Okay,
MBA,
the
and
next
after
level.
that, yeah, and after that, I'll be looking to recruit for maybe junior level management careers.
Or
So yeah,
even higher level.
yeah, 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 yeah.
Personal.
Absolutely, absolutely. Yeah, you know that's the thing about B school. I mean, it opens you up, the way you think. I mean, the diversity of people who you meet here, opens you up. So I'm really excited, and so I'm looking to recruit in finance,
Yes,
simply because that's where my strengths are. But I'm also interested in supply chain. So Michigan State is very big in
yes,
supply chain. In
yeah,
fact, over the past 13 years, they've been the best school in supply chain here in the US. So I'm also looking to get into because of my quantitative background. I think I'll fit in very, very nicely
yes,
into that. Yeah, and investment banking is
yeah,
always something that I'm looking at closely. Yeah, so I guess it's going to be interesting few years after B school. Then in terms of B school, I think I'm enjoying it.
mhm.
I'm enjoying it so far. Um, it's different the way we learn here.
I
It's
was going to
different
ask
from,
that,
yeah,
Rufaro.
yeah, yeah, yeah. I think it's so the major difference that I've seen, especially if I compare with my undergrad, is there is not much emphasis on content.
In Zimbabwe.
Yeah, in Zimbabwe there was more emphasis on content.
What
So
do
I'll
you?
tell you, trust me, if I take a first year finance student
Yes,
from NAST who has just completed their first year, and I bring them to my class today,
yes,
I think they can fit in very well in
yeah,
terms of the
theory, right?
content part. So content is just 1/3 of the program. There
Yes,
is more to that. There
mm,
are things like soft skills,
yeah,
networking, things like that, which I believe we did not have back
yeah,
home when I did either my undergrad or my master's. So in terms of content, I'm really not worried,
yeah,
especially considering that I have my master's and I've been doing
yeah,
CFA. In terms of the content that I'm learning,
yeah,
it's not like I'm surprised that I'm learning
yeah.
new
The
things,
theory,
but
the
it's
theory
it's
part,
yeah,
right?
the theory part, absolutely, but it's now the other things that it's the delivery of the lecture. Especially, I have this lecturer who I like, who teaches finance. Before each and every class,
Yeah.
he tells us about things that are actually happening in
Exactly.
the US. He gives reference to companies. This other day, we're talking about NVIDIA's earnings score. So things like that. That's where the practicality bit. But in terms of the content, I don't see any major
Yes.
differences. Yeah.
I had the same experience when I was doing my first master's degree. And one thing I realized was that in terms of theory, trust
Yeah,
me,
yeah, yeah.
mix we did, the Don Bush model. Interestingly, these guys who developed the models that I was learning in Zimbabwe, they actually graduated at the Vancouver School of Economics at the same university.
Wow.
So I was like,
Wow.
oh, this is interesting.
Yeah, yeah, yeah.
They were flaming model. They graduated. So the thing is like the professors, these are some of the professors who write the books that some of the books that we were using. So in terms of the theory, it was fine. But now for the
The
MBA,
practical.
you have to think differently. For example, you have to prepare for the interviews. They even,
Yeah,
skills, to research. And of course, those are some of the things.
yeah,
It's
absolutely.
interesting that at the end of the day, you can learn and still bring something on the table. So I'm just excited about what the future brings for you. Now,
Yeah,
conclusion, is there anything that you'd like to share with the audience?
yeah, yeah. You mentioned briefly about debt,
Yes,
and you said you don't like
every
debt.
consumption date at least.
Yeah, 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 yeah. Consumptive. But what I've realized is that, at least for me,
Mhm.
the conditions that we've lived in Zimbabwe, have sort of like hardened us. So I'm a lover of debt. To be quite honest,
Yeah,
I don't mind. I've bent my fingers, like I said in the previous example.
yeah,
But we are a people who lived through hyperinflation.
yes,
We know that you can be having something today, and
yes,
tomorrow it's less than what it was yesterday. So our my risk appetite is somewhat way higher because I've lost something before. So you know what they say, what doesn't kill you makes you strong.
you
So
learn from that.
yeah, yeah. I don't know if people realize that, but the the periods of hyperinflation, how they mold you, your psyche, the way you look at things,
Yeah.
everything. You become somebody who says, if there is an opportunity to get 100,000 debt, give it to me. We'll see what happens later. But obviously, I'm a financial analyst. That is not any advice.
You are
But
skilled to
yeah,
handle it.
yeah, 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 absolutely. Yeah, but the point that I'm trying to drive home is that the risk appetite is somewhat a bit higher than the risk appetite for an ordinary person who has never gone through.
Yeah. And you have the skills to navigate that and to understand.
Yeah,
And
yeah,
you
absolutely.
I did trade options. And now the way that I do, if I do infrequently do, but I don't see the reason to trade options now because there are also options for leveraged ETFs. And I've learned that the faster that I think, the quicker that I want, I think I would make money. In most cases, I've lost money.
Yeah, 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 yeah. A quick buck is not quick
Yes.
anyway.
What I've
Yeah,
learned, at least from the Canadian and US markets that I, like trade and invest in, is patience is very key.
yeah, it is absolutely.
And then sometimes you can make one trade in 3 months, but
Yeah,
that one trade can give you money to carry you
yeah,
through.
absolutely. Yeah, which is more than you could have done
Yes.
doing
And if
two
you
trades.
trade frequently, then you are paying fees, you
Yeah,
know,
yeah, yeah, absolutely, absolutely. Yeah, 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 yeah. The fees
and
will
but
eat into your.
yes, and in the context of debt, so were you referring to like borrowing in the Zimbabwean context? Because here, the economy is very stable, so if you borrow with the expectation that unless maybe inflation goes up, and if you're on, variable interest or fixed interest, it's kind of like it's way complicated than that. I've seen people who are really, really in debt, but I think personal finance is personal, you know.
Yeah, yeah, absolutely, absolutely. Yeah, so what I was saying is basically it, it's very unfortunate that I used debt, but
Yeah.
at the end of the day, what I was talking about is risk appetite.
Yeah, yeah. Okay.
Yeah, it's to do with the risk appetite
Yes.
because we've lost things before.
Yeah.
We're not really afraid to take on debt.
Yeah.
Yeah, but absolutely, there's an expectation on your part to make sure that you pay off that debt. And
Yeah.
whatever you are doing should have at least a return on investment, which is greater than the cost of debt.
Yeah.
Otherwise, you're just flashing money into the toilet.
Oh, yes. And that happens a lot sometimes. And with that, I want to give you an opportunity to also share anything that you want to share with the audience, particularly maybe those who like to invest in the Zimbabwe Stock Exchange. Are there any insights that you want to share in conclusion?
Okay, thank you so much. I, I believe that yeah, absolutely there are opportunities. Zimbabwe doesn't only have the Zimbabwe Stock Exchange; it also has the Victoria Falls Stock Exchange. So if you're somebody who probably has exposure in USD, it's an option that you can have a look at it. It's pretty much in its early years,
Yes.
and for somebody who wants quick trades, I wouldn't really recommend. But somebody who wants to do it for the long term, I think there's some companies there, your Simbisas, which
Yes.
are very which are growing at a very good rate. I mean, in terms of expansion, even if you don't want to be technical,
Yes.
looking at the numbers, the growth that you can see as an ultimate customer to the company.
Yes.
It's interesting. So there are companies there. If you're somebody who has exposure in ZWL, the
Yes.
ZSE is obviously a good place. What I really don't usually encourage people is to, if you're somebody who has USD, then you change your USD to
Mhm.
ZWL, then you get into the market.
Yes.
Yeah. But yeah, it's exciting. But more importantly, I think the biggest investment is investing in yourself.
Yes.
So if you're somebody who's looking to things like come to the US, I've told myself that I'm going to write an article
Please do.
de detailing the exact steps of things that you need to do to
Yes.
come and pursue your education further in the US. Yeah, I think it's important. Think of postgraduate as
Yes.
an investment. So
Yes.
you're looking at it in terms of return on investment,
Yes.
things like that. Yeah, so it's as good as investing on the stock market,
Yes.
investing in yourself. Yeah,
Yes.
and you have control anyway. You have more control because you are the vehicle that you're investing into.
You can choose to
Yeah,
then go and work in Germany, in Europe, in
yeah.
Australia, right? In
Anyway,
Zimbabwe or
yeah.
in Wall Street. You
Yeah,
know.
any way you want. Yeah, so for the young degree holders, especially in Africa, I would really recommend, because sometimes you soon after varsity you might not fail to find a job which you believe pays you the equivalent of what of your worth,
Yeah.
right? And that's a very frustrating period for young working professionals. But look, it's not the end of the road. There are a lot of opportunities for you to further your education and then getting. Um,
My friend, it's been a pleasure having you on the podcast. Thank you so much. And I hope we'll bring you back at some point and, take stock of, the developments on your next chapter.
yeah,
And
absolutely.
yes, and with that, allow me to just thank the audience for tuning in, and I really appreciate the time. And please make sure you comment if you have questions to Rufaro. Please make sure you put them on the comments, and also uh, share his, social media handles so that you can follow him. He is a very interesting guy. He shares a lot of interesting insights. For me, I follow him because I learn a lot, even including in this interview. So with that, thank you so much, and may the markets be with you. And we'll see you on the next episode. Thank you so much.
Thank you, Isaac.
Thank you so much for tuning into this podcast. I started this podcast with the goal to share insights on personal finance, investing, and career insights. But did you know that out of all the people who tune in on this podcast, and by the way, I appreciate you, all of you, only 10% are subscribed. So if you are one of those people who are not subscribed, I highly encourage you to subscribe so that when I post content in the future, you get notification, and also this podcast can grow. In return, I will bring in guests from different parts of the world who are successful in their own rights. The goal is to share their personal experiences on personal finance, investing, and also career insights. That way we can also learn from each other through our conversations. I hope you enjoy yet another podcast at Streetwise Economics. Have a wonderful time and may the markets be with you. Thank you again, dear viewer.